Hi everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in, take a look, see what's going on today. And again, if you want to follow me at Score Finance, and if you want to join our community, finding-value.com, where I dive deeper into all these topics, sectors, subjects, looking for potential investment opportunities, sharing those opportunities with everyone in the community. I really strive to get everyone in the community the best entry points that I can find. I do not front run anything. I accumulate when everyone else does. I share all of my purchases out and open with everyone in the community. I even share an entire portfolio of how I built it, what I bought, why I bought it, and I shared all of it so you guys can get an idea of how I operate and the strategies that I deploy. If that's something that interests you, special is a coupon code that you can sign up using. You get 50% off the first month only on a monthly membership and a $100 discount on the yearly membership. And you can always swap from the monthly to the yearly if you like what you see. So we've got myself posting on Twitter here. I didn't really see a ton of really good, enticing things to share today. Um, here's just a random talking point. It's tough to run a YouTube channel because if you're really good at what you do at investing, you are always buying things that people are not looking for. You are always going behind the scenes when people aren't looking at it and buying bottoms when smart money is accumulating. You can tell how smart money is accumulating by the patterns that are being created by the charts. And I use ratios to give me an unbiased data or an opinion on the market of if something's expensive compared to history or cheap. And then I just go around buying in undervalued sectors when no one's looking. Not a great way to run a YouTube channel because YouTube and the people who are searching for content are always searching for things that are moving up. They are in the retail. So if you want to be on the leading edge, if you want to try to accumulate before everyone else to get the entire cycle run, well, I mean, this is what I've learned, and that's how I do it. It's just not a great way to run a YouTube channel because clicks are always chasing things. The clicks are chasing, it'd be silver right now and gold, but they're not chasing the things that are out of favor. And the things that are out of favor are the things that are going to make you the most amount of money. The faster you realize that, the better off you'll be as an investor. Well, anyway, this is crude oil to copper ratio. I said, why not? Why not share it? To me, this looks bullish for crude oil over copper. We've got a consolidation here. It's a falling wedge, and falling wedges are bullish. We have a false breakdown in 2020, and we broke out of that pattern in 2021. We consolidated on top of the structure that we broke out in a falling wedge, and we could break out at any point. So that's crude oil versus copper. What kind of market condition is this signaling? Or is crude oil going to have a major problem? I think that we are entering an inflationary environment, and I think crude oil also has a problem. It's going to be nasty to have these two simultaneously exist or coexist at the same time. If we have money that can't get turned off because of the design of the system, and at the same time we have problems with supply of crude oil worldwide, this is going to get real interesting here, guys. This is going to get real interesting. It's going to be like 70s is going to be like a little play startup move because we could grow production into the world supply. How do you grow production if world supply is peaking and everyone's printing like madmen? I don't know. Now here's another one. I like this one. I'm using a couple of different ratios here. I don't share these a ton. This is copper to gold ratio looking juicy as can be, and that's one gigantic falling wedge. And we're at the bottom of that falling wedge. And what does that mean? That means you have the greatest amount of opportunity to potentially outperform if it breaks upward. What if it breaks downward? I'm not sure. Usually falling wedges break upward. So I'm in the camp that we could see a big move in copper, perhaps. But I also am realistic that maybe we're going to get a foot race here for a little while between gold and copper. So when I go and I look at the copper chart priced in dollars, because this is a ratio chart taking the dollar out of it. This is just how many ounces of gold versus how many pounds of copper, and we compare the price, and this is what it's showing over history. And I would consider this to be a great entry for copper. Now I go look at the copper priced in dollars. We are all squeezed up against this resistance zone. The resistance zone starts kind of here and goes up to here. And we're about to break out of this thing to the upside. So to me, I look at the ratio. I say, okay, the ratio looks good for copper. Is copper set up in dollars? It sure looks like it to me. This looks very, very good. Now, is there a possibility that gold can go sideways while copper rips? Yes. Yes, it very well could be. And what we would see simultaneously, I think, is crude oil run up with it. So we're looking for crude oil to also potentially break out of its pattern here. That squeeze going on here. I don't know why my line, there it is. We're looking for a break here. Now, if we get a break in both of these, I think the inflation running through the system is going to be game on. It's going to be game on. So got that. And just to let you know more about the copper background here, Morgan Stanley on copper supply disruptions. Today's Freeport news adds to ongoing supply disruptions, with Woodmac already calculating a 3.7% or 900,000 tons of disruptions as of August, suggesting room to overshoot the current allowance on a full year view. The new estimates imply a cut of 0.6 million pounds, 270,000 tons, or around 1.2% of mine supply for 2026. This should tighten the deficit we already modeled for 2026 and bring upside risk to copper prices, with support from a weaker USD helping too. There's that chart we were looking at, and this potential breakout that we're right on top of the last of resistance. We could see a big run in copper here. Now, on the website, we have positioned for this. We have positioned in one particular, well, I'd say a handful of companies that are really going to benefit from this. Really, really going to benefit from this. Man, are we going to make some money. Brandon says, I'm shifting incremental research and due diligence from precious metals into potash, copper, uranium, defense metals, tungsten, antimony, etc., nickel, lithium, solar. We will likely see a rotation as gold, silver digests recent moves. I want to be prepared. We are already in these. The patterns have already bottomed in lithium, nickel, defense metals. Uranium's already bottomed and heading higher. In copper, we've already purchased what we like, and we call it fertilizers. We're not limiting ourselves to potash because I think ammonium and urea ammonium and all these other ones are also better than potash for the bull market. We've already positioned in a lot of these sectors already, or are positioning, because they are exhibiting bottoming patterns and heading higher. So it's a pretty big deal to be looking at the patterns, because this is lithium ETF. It's already bottomed, and that's where we were purchasing. And there were some laggards that we were purchasing that were developers. that have done incredibly well. There's still one or two laggards out there that we can still identify. And here's REMX. We got it down here in the circle there. You can see the volume kicking in. So if you're looking now, you're already kind of a little bit too late. You should have been looking at the double bottom here. Now, there are other companies at this location that we've been picking off here at that corner. There are some still there in certain sectors that you can perhaps get into that are on, again, in the midweek update and all that stuff. Patrick says it's mathematical. The stock market will go into a decade-long hibernation. Before the perma bulls go bonkers, no, I'm not calling for a crash or a bear market yet, but longer this bull runs, greater the odds of mean reversion. What he's doing is he's just showing the bull markets of commodities. And during the commodity bull markets, we see a sideways trading pattern in the S&P 500 and the NASDAQ. Now, there could be a greater move to the downside in the beginning of these. So we could see a recession or something like that um, as we go through this bull market in commodities, and precious metals and commodities outperform. It will be a decade-long move. I think that we're entering wave 3 in Elliott wave theory for a gigantic move in commodities. One that's it's going to be one of the bigger moves versus history. It's going to, in my opinion, it has the possibility of beating the 1970s commodity bull market as well. So, yes, I think he's right here. You can't really do much with it. I mean, yeah, the S&P is probably going to chop sideways for a decade or so, and I'm just not going to be there. It's overvalued. I don't want to be in the overvalued stuff, so I'm not there. Great Futures AM update. Dry bulk, Capesize flat, Panamax up 2%, and then tankers, VLCC is up 1%, Suezmax is flat. A lot of tanker stuff. It's got a long runway ahead of us to the upside. It looks quite enticing. All right, so here is this here. It says, be boring. Wake up early, go for a walk, get sunlight, lift weights, eat healthy, stop alcohol, cook at home, love your family, boring is the new cool. Share this if you agree. That's pretty much my life. I mean, it really is. I mean, that is literally what I do. Um, I mean, everything there is, I do every single thing on this. That's literally me. Tavi says, clear breakout happening right now in energy stocks. Many investors have thrown in the towel on this theme. I haven't. The sector remains historically mispriced and likely offers one of the most compelling risk-reward setups in the market today in his view. I expect this move to gain momentum in energy stocks. Yeah, I'm loaded to the gills, guys. I'm ready for this. I am ready. And you know what this fractal pattern is right here? That's the same fractal that silver had and gold had and all these other ones before it broke out. And we're right there breaking out. So what do you think is going to happen here? We're going to go. We're going to break. We're going to run. It's going to be big. It's going to be glorious. This is like buying precious metal stocks in September, October of 2022. Maybe a little bit later than that. A little bit later than that, because some of them have bottomed already and they're starting to come off the bottom. So they're not at the bottom of the bottom, but it'd be it'd be similar to maybe buying at the beginning of 2021, something on the lines of that, or 2023. Sorry, 2023. But yeah, huge opportunity here. I've got the ratio charts up above crude oil versus copper, and copper about to outperform gold. Um, it's all this money just rotating, and then people they chase things, guys. They chase things. That's all they do. They just run around chasing things. And to be ahead, you got to chase patterns, not price movements. And then if you're really, really, really good, you chase ratios, you chase market cycles, and then you chase technical patterns, and they get into full alignment at some of these bottoms. And then you can buy with fear in the market you've mastered the markets. If you've got an alignment and there's fear present. Another one from Tavi, he says rig activity tends to lead oil production, and the current trend is hard to ignore. In the Permian Basin, the largest oil producing region in the US, active rigs have dropped nearly 30% since April of 2023. While many attribute this to improved efficiency, and that's partly true, the scale of this pullback is becoming too steep to ignore. In my view, it's only a matter of time before production plateaus or even begins to decline. From a market perspective, this is a bullish setup for energy commodities and oil and gas companies, in his opinion. There's the rig count dropping, and this is production starting to potentially roll over. We've been waiting for that. And notice this too, this is a three-hump consolidation before it's going to ramp higher. And I think it's going to ramp higher due to geological constraints. This is going to get real interesting here because we're going to drill more and we're going to get less at some point. I can't tell you if it's going to happen immediately, but it will out in the future at some point. The drillers are going to make absolute killing at some point. Here's another one that, again, I'm just going to reiterate. Silver, the percentage increase from the 1930 low to the 1980 high is equal to the percentage gain from the 2001 low to the measured cup and handle move target of $666 an ounce. Silver is potentially a 15x over the next 10 to 15 years. So a lot of people like narratives. They want a story. Why would silver go up that much? Well, I'm going to tell you my opinion. My opinion is because other things aren't working. And when you have very few things that work and people just run around chasing price performance, they're all going to chase into the few things that work under the market conditions that are coming. So in an increasing interest rate environment, we're going to see bonds get sold off. We're going to see the S&P 500 do one of these sideways things like this and sell off and go sideways. And then everyone's going to go chase energy and precious metals and other commodities that are working. The problem is there's a ton of money in the bond market and the equity market. And that money, the amount of it, cannot be absorbed very easily into precious metals and commodities. So the way it gets absorbed is that prices are going to fly. That's how it's going to work. So you have a ton and ton, you've got just boatloads of money coming into the system and rotating that's already in the system into asset classes that can't absorb that type of money very easily. And the only way it can absorb it is through astronomical price increases. And this is why you see an astronomical price increase and the projected move of the cup and handle in silver. Here's GDX versus NDX, which is tech. And remember, we're talking about rotation of money into precious metals and commodities away from financial assets, which tech companies are more financial assets. So this wedge breakout and retest in favor of gold miners versus the tech sector goes unnoticed for most people following mainstream media. Do you see that falling wedge in the breakout? This is the beginning, potentially, of this move here. Now, it doesn't mean that we'll see a downward move in dollar terms. So a lot of people will confuse it. They'll say, Andy, it's still going up. Time out, buddy. Time out. You need to look at the ratio chart to see what is outperforming. This here is the truth. It's hidden behind weakness of the dollar. So this is the truth here. And when this starts to really get moving, people are going to notice. Trust me. And we're going to see everything start to outperform the S&P 500 and NASDAQ that is related to, we'll see XOP divided by, this is the NASDAQ composite. Do you see these falling wedges that we're getting here? These are all going to start to break out soon. And some people on the website, on Discord and whatnot, they're making comments like, "Oh my God, I've never experienced this type of um, these types of moves," because a lot of us are up somewhere between 50 and 150% year to date this year, is the types of returns, and we haven't even really broken out on some of our holdings. We've been playing precious metals, we've been playing some of these other sectors that I won't get into that are coming off bottoms. And I don't think people have experienced this type of move. We haven't even really broken out here yet. And when we do, and we get back up, and I don't know if we're going to go all the way back up. We could go back up here. That move it's ridiculous. Like I don't think people are able to um, visualize that. Like it doesn't make sense because if they're up as much as they are now, well, what the heck does that mean? Does that mean that a six-figure amount goes into seven figures quite easily? Yes, that's what it means. But it's not going to be easy. We're not going to go straight there. We're going to get pullbacks. Um, we're going to have volatility, and we're going to have a lot of fun days too. So it's all coming, and this rotation is in process. So it is all coming here. But that's where I'm going to end it for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Specials the coupon code. And we'll see you next time. See you guys.